Hello. Today in this video we will try to understand which is the best time frame to trade in the market, because traders around the world have a common confusion. They have a common question inside their head: which is the best time frame to trade, or how do I find the trend of the market? So let's try to unfold the secret here. And the funny part is that there is no proper answer here. There is no time frame which is the best time frame, or this time frame is bad, that time frame is the best one, that time frame is best or bad. There is no proper answer. It totally depends on the psychology of the trader. Just try to understand my point here. Suppose you are trading in a 5 minutes time frame or 15 minutes time frame, and if you look at the weekly time frame, or let's say monthly time frame, you may see that market is in downtrend, whereas the 15 minutes time frame is saying you that market is bullish. Okay, so 15 minutes time frame is saying you that market is bullish, whereas the monthly time frame or weekly time frame is saying you that market is bearish. Now which one is correct, the 15 minutes or the monthly time frame? You may be thinking that the monthly time frame is correct because that is the higher time frame, but no, my dear friend, market doesn't work like that. Yes, the higher time frames are much more stable, but the time frame, okay, the time frame selection, it totally depends on the psychology of the trader. You can see that I have mentioned here your trade horizon. It means that if your trades last for a couple of minutes to 1 hour, let's say you trade mainly mostly on 15 minutes and 15 minutes time frame, and your trades hardly last for 30 minutes to 1 hour, 1.5 hour, then you do not need to see what is the weekly time frame is telling you or monthly time frame is telling you, because you simply um, concentration should be on the 15 minutes time frame, because your trades do not last for weeks and months. If you are a trader, if you are a long-term trader, okay, if you are a long-term trader whose trades last for 1 week, 2 weeks, let's say a couple of months, then you do not need to see what the 15 minutes time frame or 5 minutes time frame is telling you, because those time frames are irrelevant. They have no relevance for you, because you are the long-term trader. Your mostly focus is on the daily time frame or weekly time frame. And when you are a day trader or a scalper, okay, then you do not need to see what the monthly time frame is telling you or weekly time frame is telling you, because that time frame is irrelevant, because your trades only last for a couple of minutes to 1 hour. Therefore it totally depends on your trading style which time frame you should choose. If you are a trader whose trades last for a couple of minutes to a couple of hours, then in forex market you should mainly use a 15 minutes time frame, 1 hour time frame, or max to max 4 hour time frame. That's it. And if you are a long-term trader whose trades last for a couple of days to couple of weeks, then your minimum time frame should be 4 hours, 1 day, 1 week, and so on. So it totally depends on you and your trading style. That's it. And one thing that you must always remember, okay, to find out the trend of the market, you do not need to go anywhere else. Just you need to focus on the time frame that you are comfortable with, and just keep in mind that at least it should have minimum for 200 candles. You can see that I have mentioned here minimum it should have 200 candles, because if the chart is big enough, okay, if the chart is like this, then you do not get the proper picture. You do not understand what is going on in the market right now. But if you zoom out the chart a little bit, if you do zoom out the chart like this, okay, then you can get the picture that okay, market is an uptrend. Okay, because if you zoom in too much, you will get a confusing picture. So just zoom out a little bit. Okay, it should have you should have at least 200 to 300 candles in front of you, so that you can understand what is the trend of the market. And once you have 200 300 candles in front of you, then just try to find out whether market is forming higher highs or lower highs. Okay, if you find market is forming higher highs like this, then you'll easily understand that this market is an uptrend. Or if you find market making lower highs, then you'll easily understand that market is in downtrend. For example, the chart of euro USD. See, this is a chart of Euro USD. As we can clearly see that, okay, this market is in downtrend, because we can see that market is constantly going down. Market is forming lower highs here. Market is unable to cross the previous highs. Therefore, we have a proper clarification understanding that Euro USD is in downtrend. Like this only, in your charting platform, in your time frame, you just need to find out whether market is forming higher highs or higher lows. That's it. You do not need to focus on anything else. If you have watched my other videos, then you have seen me consulting the weekly time frame. If you have watched the video carefully, then I do not talk much about the trend of the market in the weekly time frame. I just focus on the support and resistance levels. For trend, to understand the trend of the market, I simply focus on the 4 hours chart, because 4 hours time frame is my time frame. So if your time frame is 1 hour time frame, you do not need to go anywhere else. Just try to understand what is going on in the 1 hour time frame, what is going on in your personal favorite time frame, and just trade accordingly. If your 1 hour time frame is in uptrend, you should be buying, and if your 1 hour time frame is in downtrend, you should mainly be selling. That's it. It's simple as that. Bye bye, take care.